Good day, and welcome to yet another one of our Ransford's weekly reports. I'm with Govender, and as usual, what we'll do is we'll go over 3 events and news stories from the last week or so and discuss how they affect you and your investments going forward. 3 topics this week are going to be European inflation, developments in AI, and finally the South African rate decision, which we'll take a deeper dive into. Okay, starting off with European inflation numbers. We had European inflation numbers coming out this week. We saw a bit of a mixed bag. For instance, the overall number fell by more than expected, showing a sharp decrease in inflation, primarily being driven by a drop in energy prices. Energy prices have come down quite significantly, and so we are seeing inflation in the US, in the European Union, come down to about 6.9%, a significant fall from the 8+% we had a little earlier. Unfortunately, the European economy is the biggest European economy, which is Germany. The fall was a little less than expected. Their number is about 7.8% at the moment. They expected closer to about 7. One of the Spain, for instance, had a bigger fall than expected. They fell from about 6 to about 3. They expected about 4. Now, an important fact to notice here is that this has been driven by energy. Energy prices have come down significantly, or at least the increases have been much less than they were last year. That means that at the moment, that one big driver is being removed. However, one of the problems with inflation is that inflation tends to become sticky over time. And one way to measure sticky inflation is looking at core inflation. And we've seen core inflation in the European Union as a whole rise to about 5.7%, which is significantly higher than the target overall inflation rate of 2%. So even if basically you have these inflation numbers around fuel and like a couple of things come down, if you look at the core inflation number, which often includes things like housing and services and so on that are much stickier than, for instance, fuel prices, those things are rising and they're keeping quite high. We saw a similar thing in the US as well. Now the problem with this is that means that any hope of cutting interest rates very quickly might be diminished, because yes, we might be seeing like this time around a big surprise on the downside in terms of inflation, but getting to that 2% target is going to be very difficult if the core inflation number is like 5.7, because that's the number that affects people directly, and that's the number that people are going to basically be looking at least to a certain extent when it comes to the cost of living, their needs going forward, and therefore that's going to translate to higher wage demand. Remember, I always said it comes to inflation, it's when it translates to wages that becomes really sticky, because wages don't like to go down again. Okay, so that's a European inflation number. Overall good, but with some areas of concern inside. Next, in the area of AI, I think this should probably be like a a regular feature of these discussions, because AI seems to be such a big topic at the moment. But anyway, this week we had a couple of developments. We had first of all the movement by some experts in the area, people like Elon Musk and some professors, some scientists and so on, to sign a letter that says that's calling for a pause in AI development or progress, at least for 6 months, in order for policy to catch up to the actual progress that's occurred in the field. We've been talking about AI for the last couple of weeks, quite regularly, and you should understand that the stuff that's happening right now is surprising to people that are in that field. The level of progress that they've gotten, for instance, in things like ChatGPT and GPT-4, some of the image processing that they've been doing, etc. That kind of stuff has really kind of surprised people in the industry. I mean, people have said they didn't think this particular way of doing things, these large language models and so on, some of this, layering of more and more transformers that's basically increasing the scale of what you had. It's like kind of adding more neurons to a brain without doing too much more interesting stuff around the structure of the brain. It just makes you smarter. It seems to be happening here. We're adding more transformers, more like components, like making it larger. The system that trains gives you a much better outcome, and there's no diminishing returns. It's like having a car. You put a bigger engine, the car gets faster and faster. But eventually, the bigger engine does make a difference, because there's like tires and there's gearbox and stuff to worry about. Right now, we're still at the point where adding more and more engine seems to be working. And that's what people are doing, adding more and more engine, okay? And so this particular progress has been, of adding more and more engine, has been making this particular system get faster and faster and faster and better and better and better at a rate that is surprising to people that were, looking at it in advance. There had been thoughts that there'd be more, developments required to get to this level. And in terms of what the outcome, of this particular thing is, almost certainly nothing. There's no way that you're going to see Microsoft or now at the moment Google do much in terms of pausing what they are doing right now, unless they've been forced to by the government. A petition like this, I think, has no real impact except to say that we did it, and it's out there at the moment. That is something I think that in terms of the general impact on the industry could make no difference. But it's interesting to see that people are right now getting worried about AI in a way that they weren't like a few years ago. And what are these policy differences? What are the important things that we need to be concerned about? Well, we're seeing AI get into what's called these kind of APIs, these kind of plugins that they're putting into the system. So you go to plug in into like ChatGPT, and that's one of the other things we're talking about now. And that plugin allows you to kind of develop your platforms, almost like having an app on the App Store. Think of it in those terms, where you can basically make a little program that works off ChatGPT. And I've seen some interesting things, especially spreadsheets, by the way, are very, very that seems to be a very interesting area. And obviously that seems quite boring to most people out there. But if you work in an office and you work with any kind of spreadsheet, you know how irritating and how difficult it is sometimes to work with these things. Can you imagine just having a spreadsheet out there, you're having a list of profits or long profits, incomes from listings here, and then you just basically say, you have a company and you just make a budget of widgets, whatever. It says, okay, for this widget category A, including this kind of widgets here, what were the total profits? What were the revenue? What were the expenses? What were the drivers of this and that? And you could pretty much write that into your ChatGPT plugin and get an Excel, kind of function that comes out of it, plugs into a spreadsheet and works, perfectly fine. No need to go and, Google the different things here. No need to worry about the exact notation and so on. You just basically, in plain English, write that out, and then you have a function that works on an Excel spreadsheet. You can imagine how much easier your life would be. And we've seen, people now being offered a significant amount of money. We're talking, multiple $100,000, say $200,000-$300,000, salaries for showing expertise in writing prompts for ChatGPT, or not GPT-4, I should say GPT-4, the newer version. That seems to be a new career that's been emerging. And remember, GPT-4 came out about 2 weeks ago. That is the timeline we are seeing right now. 2 weeks, and now people are basically doing programs of it that are affecting things like spreadsheets, and obviously going to affect a number of other things. And there's obviously careers being created of it, new careers paying $200,000-$300,000 a year based on it. Okay, so like I said, there's very little chance that letter is going to have much impact. Look, there are concerns around AI, and I'm probably going to do a seminar on this in a month or two's time, where I'll cover basically more detail. I think it's scheduled for May, and then we will go over what is involved in AI and what the concerns are going to be around AI at the moment. Okay, and then we come to the main topic of the week, which is the interest rate announcement from the Reserve Bank. Laseka Kanyaka came out with a surprise and raised interest rates by 50 basis points, 0.5%. We're expected quarter. In fact, I heard from many journalists out there that when they had spoken to industry leaders, many were willing to do interviews in advance of the decision because they were so confident it was going to be a quarter. They were going to just say, oh, we had the result of this quarter, and this is what the impact is going to be, blah, blah, blah. So it was a real surprise. The market moved significantly on that news. The rand strengthened from about just over 18 to about 17.80. That's more than 1%. If you had known that in advance, that's you could have made millions. It's a huge movement for a currency, more than 1% movement, and it happened in half an hour or so. It was a gigantic movement. Understand, most currency trades are geared, 100, 1,000 times. You could make, if a 1% move occurs, that's 1,000% return. If if it's 1,000 times geared. So yeah, it's a gigantic possibility in terms of like trading. That shows the market was totally caught on the wrong foot. They had no idea this was going to happen because you wouldn't have had such a huge impact had it been expected. The market fell. Overall market ended up positive, but the market came down after the news, and the next day it went down even further. But negative a little bit. And the question is, was this the right move? What is the Reserve Bank trying to do? And what's the impact for us going forward? Firstly, was this the right move? I think probably yes. Now, it's painful for consumers. It's painful for investors. It's painful for the country as a whole to have high interest rates. I mean, we're talking about, I think, every 50 basis point increase is tens of billions of rands, of extra cost to the country. Higher car loan payments, higher interest payments on your house, higher bank payments, all those things. It's more cost in the country. We have been paying, I think, over 4% more cost. I mean, that's like well over 100 billion a year more in costs that we are paying for these things. 100 billion probably. That means that if you're looking at what this impact is right now, it's just another bit more pain to what we have at the moment. Why is it necessary? Well, in South Africa, we have a currency that trades with the world. If we don't keep the reputation of the South African Reserve Bank at a very high level, what we will get in South Africa is a depreciation of our currency, which will cause inflation because we import a lot of stuff, which will cause us to have to increasing interest rates anyway. Number one. Number two, what we've seen, like in terms of South Africa's stability, considering all the problems we had with load shedding, with whatever. Yes, the currency is depreciated, but look at some other currencies out there in the world, like for instance, one of the stars in Africa, like Ghana, or places that we really like stars a couple of years ago, like Sri Lanka. These are not insignificant countries. These are populations of 20, 30 million people. In some cases with Sri Lanka, with a higher income per capita than South Africa, or even much larger countries like Turkey, with bigger populations, wealthier populations than South Africa. When they mess around with interest rates, when the market wants one thing and they get to the other thing, you see a dramatic fall in their currencies. The Turkish currency, the Turkish lira, has fallen 600% in the last 6-7 years. 600%. Yes, we've diminished in the last little while, but we haven't fallen like even, by like 50%. That's due to the credibility the Reserve Bank has with the international markets. And as the Reserve Bank governor mentioned, we have external funding needs. If we don't basically show that we are willing to raise interest rates because of inflation, etc., we are going to basically have higher costs for that funding, which is called more problems down the line. It's like you have to do it. If you don't do it now, you'll have to do it later. And also remember, we missed one of those, one of the hikes that the US did, where they did 50, we did 25. So we're going to catch up with that as well. And so we basically, if you look at the last few hikes we've had, we pretty much kept it on track. Just that they had a 50 a while back, and then a 25, then we had a 25, and now we have a 50. That's kind of keeping us back on par. And that has to be done because, of course, the US dollar rate is very important for us in South Africa. Now, what's the impact going to be on people and like the markets going forward? Obviously, with people, like I mentioned, you're talking tens of billions. I think it's like 20, 30 billion probably rounds a year that we're talking about in terms of extra cost for consumers in South Africa, for people in South Africa, businesses and so on, for having this hike come through. So it's an expensive hike. It's not like it's cheap for the Reserve Bank to do what it's done. It's very costly to people in South Africa. We're talking a home loan is more expensive. If you have a R1 million home loan, you're paying basically another 500 rands, per month, which is not insignificant, if you have basically around about that 500 per month, it's like 5,000 per year. Okay, you're talking about car loans obviously increasing as well. All these difficulties are in place. So if you keep taking into account just the cost per country, difficult, will be borne by people that are borrowing, people that are obviously don't have the cash to buy things, but essentially have huge amounts of savings and so on. Of course, if you have savings, this is beneficial. You have retiree out there, you make a bit more money. And what the impact on the market's going to be? The impact on the market we've seen already has been negative. The market's come down, the rand's gotten stronger. But the stronger rand's important because it's going to help with things like petrol prices. It's going to help with things like, for instance, imported goods. It's going to help inflation come down as well. And at the same time, of course, demand is going to be decreasing right now. And I'd like to leave out with one important fact. According to the Reserve Bank governor, the neutral rate, or neutral real interest rate in South Africa should be about 2.5%. That means interest rate should be 2.5% higher than what the inflation rate is right now. Our inflation rate is not, anywhere near that. So we actually, in his terms, still at a point where we are probably at a accommodative monetary policy. Our last interest rate, thing was like 7%. Inflation was about 7%. That shows that we are just barely above, the real interest rate level being positive. So yeah, that is something to take into account as well. Okay, thanks for joining me, and look forward to speaking to you guys again next week. Cheers.